Most people think billionaires make money by selling stocks. But what if I told you, the smartest investors almost never sell? Because the moment you sell, you trigger taxes. And for billionaires, that can mean losing hundreds of millions of dollars instantly. So instead, they use a completely different system. A system that allows them to live like billionaires, without ever selling their assets. And without paying taxes. It's called buy, borrow, die. And once you understand it, you'll never look at money the same way again. Let's start with the first step. Buy. When billionaires build wealth, they don't keep cash sitting in a bank. They convert it into assets. Mostly stocks. Companies like Apple, Amazon, and Tesla. Over time, these companies grow. And as they grow, their stock prices rise. Which means the billionaire becomes richer. But here's the key detail most people miss. They haven't actually sold anything. This is called an unrealized gain. On paper, they might have made billions. But legally, they haven't earned taxable income. Because in most tax systems, you only pay taxes when you sell. So as long as they hold their assets, they pay nothing. Now imagine this. You own $1 billion worth of stock. If you sell it, you could lose 20%, 30%, sometimes even more to taxes. That's hundreds of millions gone. So instead of selling, billionaires do something smarter. They move to step 2. Borrow. Instead of selling their stocks, they use them as collateral. They go to banks and say, I own billions in assets. Lend me money against it. And the bank agrees. Because to the bank, this is one of the safest loans possible. If the billionaire doesn't repay, the bank simply takes the stock. So the risk is low. And because the risk is low, the interest rates are also low. Sometimes incredibly low. Now here's where it gets powerful. The money they receive is a loan, not income, which means it's not taxed. So instead of selling assets and paying taxes, they borrow money, tax-free. And they use that money to fund their entire lifestyle. Private jets, luxury homes, investments, all funded by loans, not income, not taxable. And it doesn't stop there. Because often, the value of their assets continues to grow faster than the interest on the loan. So over time, they're actually getting richer, while borrowing money. Now you might be wondering, what happens to the debt? Do they ever have to repay it? Yes, but not in the way you think. This is where step 3 comes in. Die. When a billionaire passes away, their assets are transferred to their heirs. But here's the key detail. In many countries, those assets receive a step up in basis. Which means the original purchase price is reset. Let's say they bought stock at $10 million, and it grew to $1 billion. Normally, selling it would trigger taxes on that gain. But after death, the value resets to $1 billion. So if the heirs sell it, there's little to no taxable gain. Which means, those taxes are effectively erased. And the cycle can begin again. This is why many billionaires never sell their assets. They don't need to. They borrow against them, live off the loans, and pass the wealth forward. All while minimizing taxes. And this isn't just theory. It's widely known in finance. And used by some of the wealthiest individuals in the world. But it also raises a serious question. Is this system fair? Because while most people pay taxes on income, billionaires can structure their wealth in a completely different way. Supporters say this system encourages investment. It keeps money flowing into businesses. It drives innovation. But critics argue it creates a massive gap, where the wealthy operate under different rules. And the truth is, both sides have a point. Because this strategy doesn't break the law. It uses it perfectly. And that's what makes it so powerful. Because in finance, the biggest advantage isn't just money. It's understanding how the system works. And once you understand that, you realize something important. Wealth isn't just about earning more. It's about structuring what you already have. Because the difference between someone who pays taxes and someone who avoids them isn't always income. It's strategy.